trading is like poker. Oh, here is a setup that I'm looking for a a long time. When okay, well, that's a tilter. I just did like 10 minutes of video without the audio recording because it's late. If you're wondering why don't I have a shirt on, it's because I recorded a video, then I went to the gym, and I came back down, and I'm so tired. Dude, I was in the middle of the best part of the video too. We're talking about edge and how you get an edge in trading, guys. And this is gonna be my second time talking about it. I had a bunch of quirky jokes about, edge and edging and, other stuff that's a little bit on the edge for YouTube, but we're gonna skip all that. First, my name is Forrest. I invest stuff. You should too. If you want to learn how to trade, guys, I know this video is super gimmicky and I don't have a shirt on, but whatever. It's YouTube, guys. We do what we got to do to join us. Link is below. You can use my coupon. It'll give you right now 80% off on Apex. They run sales. You can use the same coupon code for any other sales. It'll give you whatever the highest discount is at the time. Over $1 million in funded accounts. There's a 3-day free trial. You can see the profits people are making and things like that. And with the 3-day trial, of course, you can just see us live. We trade live every single day in the Discord, do our call outs and stuff like that. Anyways, what does it mean to have an edge, right? So having an edge in trading is your ability to look at a setup and compare it to previous setups and have a percentage for expected outcome. So the example that I want to talk about is essentially a bull flag. Let's just use a bull flag. We're going to ignore risk reward, RR, alpha and things like that. We're not even going to think about hedges, or we're just going to think about binary trading, which is what, futures traders do, right? You're either betting long or you're going short. We see a bull flag on the 15-minute chart, and then we compare a bull flag on the 1-minute chart. On the 15-minute chart, when you're looking at a bull flag form, you're looking at over probably an hour of price action, right? Because you need the body, right? The beginning of the flag, the base. Then there's going to be the bar coding part, the candles that are wedged side to side. And then you're going to have the fake out and then the breakaway candle, right? The second measured move that goes into your next volume node or whatever your price target is. That's going to happen over an hour of time, right? Bull flags on the 15-minute chart take a long time to form and to play out. So you have a lot of time to analyze, understand price. You can clearly see the different areas where it's rejecting price, where it's holding, right? The resistance on the top side of the flag. You can see where the bottom side of the flag is. Quickly, you can draw your trend lines, sip your tea, make a coffee, use the toilet, all the things you can do while this flag is forming. Let's look at the 1-minute chart. 1-minute chart, flag forms. Let's say you have body, then you have 5 candles that form the flag of the flag, and you're deciding if this is going to break out or not. That's only happened across 6 minutes at time. So you have one version where there's an hour, and then another version where there's 6 minutes. Now, when you look to the left on your chart and you see all the other times similar price action happened on the 1-minute, you're going to see a lot of times where it didn't play out. And the reason you're going to see that is because there's so much volatility on the 1-minute that doesn't exist on the 15-minute. And this is going to sound super obvious and cliche, but all of that volatility on the 1-minute, right? The bottom wick, the next candle that's a top wick, the engulfing candle, the bar coding candle, another top wick, another top wick, another top wick, a bottom wick, another engulfing. That's not even 15 candles I just went through. All of that is hidden inside of one 15-minute candle. Everything I just said, right? So all of that becomes one candle on the 15. The volume inside of that, so when you're actually analyzing volume and seeing where the volume injection comes in, does the volume come in on the lows? Does it come in on the highs, right? Are we truly rejecting this upper price, right? Is volume dropping off? All of these things become factors when you decide if you're going to actually trade the breakout on this flag or not. On the 1-minute chart, there's so many more decisions that you have to make in that time frame, which makes it much harder. So how does this roll into having edge, guys? We often talk about A setups, B setups, C setups. SMB Capital, great channel. Check it out. I love watching their videos. They did a video on this. I highly recommend it if you want to become a better trader in general. But you should try to think about all of your trades as A, B, or C setup. Something that I do is a little mental game that I play when I go into a trade. I say, is this an A setup? Is this trade getting me closer to my goals? Or am I just trading to trade? The second one is kind of just a me thing, but ask yourself, is this an A setup? Is this the type of trade that when you describe yourself as a trader that you think of yourself as taking? Is this the type of trade that is likely to give you money, or are you gambling? Are you speculating, right? Ultimately, trading is like poker. If a trade has an 80% chance of winning, you're gonna lose, but you're gonna win 80% of the time if you have edge. So if you have edge, a well-defined edge, you can win. Now, having an edge means that when you look at your setup, if you say, hey, I think that this is going to do this, you should have examples of other times where that played out, right? It should make sense. You should be able to articulate to yourself and certainly to other people how that trade is going to make sense and what your edge is, why you believe that. You don't have to have a percentage basis. A lot of people, quite frankly, don't back test like that, but you should have notes. You should have extemporaneous notes, right? I know it's a big word. You should have comprehensive extensive and detailed notes of your trades, guys. I use Notion. I do a lot of stuff on my iPad, but you should be taking screenshots of price action, writing down your notes, your thoughts going into a trade and coming out of it. And I guarantee you, unless you do that, even if you're just looking at the charts every day, it's going to be hard for you to come up with an edge. It's going to be hard for you to actually say, here is a setup that I'm looking for. For a long time, when people say I have setups, I was like, what do you mean? I was always analyzing the market and trying to like do on the fly. And then eventually when you actually take notes, you start to see things and you're like, oh, this is something that happens at this time frame, or this is a type of, price action that isn't in a book, but I just see it on this ticker all the time. I see these two candles reversal, a big green candle, then a red engulfing candle right next to it. That's the exact length. And then the reversal, right? This break in structure. And you'll just see these things if you just take notes, but you have to put it in here, and that's how you get edge. Find this for you. You have to be able to go into a trade and have a backlog of similar price action or setups that you can point to and actually see the outcomes. Otherwise, you are truly using discretion, and you might be right, but you don't want to maybe be right. What you want to do is you want to probably be right, because if you're probably right, if you take enough shots, then you'll win. The times that you are right will outnumber the times that you are not right. That's what it means to have edge. Let's talk about B setups and C setups. B's and C's aren't bad. A B setup to me, in my mind, and because I'm a discretionary trader, I don't have metrics around all my things. What I think about it is in terms of certainty. So if I see a setup, let's see a flag, but there's just super low volume on the day. Anytime there's low volume, there's low participation, and it just takes any injection of volume and the price can do anything. So anytime we have a low volume day, all my trades are just B setups. There's huge caveats in this, guys. This is an example, but these are things to look out for. So when you're looking at your setup, you're like, most of the time when I have this, and this, I'm very, very confident, but I'm missing two of those. It looks very similar, but I'm missing two. It's a B. It's a B, guys, and you should pull back, and it's okay to take those shots sometimes. Sometimes what I'll do in my uncertain setup, I'll just write down my thesis. I won't take the trade. I used to like sim trade. I won't even do that. I'll just write down what I think is going to happen, and then I will take really detailed notes about how it plays out so that the next time I see it, it becomes a better setup, right? And this is important because my A setup is not your A setup. You have to have the notes and the detail and the data for it to give you edge. If you don't have the data, you can flip a coin any day in the market and make, $1,000, $10,000, $50,000. That's not the point. The point isn't did you make money in this trade. The point is, can you make money trading, which requires edge. That's really, really important, guys. People I see all the time like, oh, high levered, and they post crazy numbers, and it's like, and then 2 days later they post crazy losses, and it's like, yeah, because you don't have edge. You're just taking shots. It's too discretionary. Need to have detailed notes, guys. It doesn't matter how organized they are. And just a thing on notes, obviously organize them, but I have notes in 3 different places. The point is I have a lot of notes, and the practice of truly looking at information with the intention of remembering it by taking notes, planning ahead, right? So before you take a trade, slowing down, writing out what you think is going to happen and why, and then reviewing that, because 2 days later, you're not going to remember what happened because you were looking at the market today. But when you go back and look at your notes, you're like, oh yeah, here's why I thought that. You can actually start to iterate on that and become a better trader. So work to define edge. If you want some help defining your edge, excuse me, it's this protein shake. Hold up. Join our Discord. If this is the first video that you're seeing of me with my shirt off, I'm sorry. I literally just did this as a gimmick. I'm tired, and life is about having fun sometimes. And I figured, why not? Why not? It felt a little weird, but why not? But check out my other videos. They're, good in my opinion. Hit the subscribe button, hit the notification bell. If you want help defining your edge, that's what I was in the middle of saying. Join the Discord, guys. 3-day free trial, ton of funded traders in there. It's a no BS place, right? I'm not gonna, this is as gimmicky as it gets, right? You come in, you're not gonna necessarily make a gajillion dollars, but what I can promise you is that we can help you become better than wherever you are today. Whether you're profitable or not, well, we keep each other accountable. We're gonna ask you hard questions, so turn your ego off, and we're always open to criticism as well. You can ask me anything about my trades, what I think, always open to become better. But in any case, my name is Forrest, I invest stuff. You should too. See you in the next video. Peace.